Let's talk about trailing stop loss. It's not my favorite method of managing my trades, but I got some questions from time to time about trailing stop. So let's see what it is and how can you use it in your trading and should you use it in your trading. The concept behind trailing stop loss is simple. Basically, that's a stop loss which is following your price. So if you open a trade like in that example, so let's say that you were long at this place after this breakout and you set your initial stop loss for 20 pips. And now you set your trailing stop loss for 20 pips. So every move of the price, your stop loss will be moved higher. So price is going up, stop loss is moved higher. Price is moving up, stop loss is moved higher over here. Price is moving up, stop loss is moving higher for 20 pips. And again, and again, and again. And let's say that there will be a turning point in the movement of the price. So there will be a sell-off. So there is no successful move of 20 pips or other specific distance. And there is a correction and you are stopped out at this recent stop loss. So basically it's a way to protect your profit because when market is moving, then your stop loss is moving together with price. But when there is a correction, you are stopped out, you take your profit, and that's why it may be helpful for you. But the problem I have with that trailing stop loss is that it works fine with stronger moves. So like in that example, we saw white candle, white candle, white candle, white candle, little or none correction movement. So yeah, in that case, if I show you trailing stop loss in that condition, then it's a great tool. But on many times you will find that market is moving in corrections. So market is moving up, some swing, correction, some swing, and so on and so on. So if I have a good entry, I prefer to use partial close. I prefer to set my take profit targets. I do not rely on trailing stop loss. What I want to do is to move my stop loss to break even, and that's it. So let's say that I managed to enter, for example, long over here and price is going up. I set my stop loss over here. I see that price is going up nicely, so I move my stop loss to the entry point, and that's it. Now I set my take profit targets around pivot point lines, and I do not use trailing stop loss. With trailing stop loss, I would be stopped out around here. So I would catch only that part of move, and I'm interested of catching the most of that move. So I'm interested of catching move to that weekly R1 line. I'm interested of catching a move to that second resistance line from pivot point, and so on. So my goal is to catch bigger swings, and trailing stop loss is not helpful with that. The only scenario that I use trailing stop loss is when I'm left with only one position. So in other lesson, I talk about partial close. So basically I'm closing my trades in parts. And if I'm left with the last trade, with last part of my trade, it's called a runner. And I want to keep it open as long as possible. So yeah, in that case, trailing stop loss is a good choice.